problem 3-13A T-Accounts. This deals with each type of T-account that will then be totaled and moved to the trial balance. So when we're looking at this first set of columns, we have all assets: our cash account, accounts receivable, office supplies, prepaid insurance, equipment, and van. These are all assets account, and when we want to increase those, we must do a debit, and when we want to decrease them, we do a credit. This next set of columns is your liability, accounts payable. That's usually money that you owe to someone that you're going to eventually pay. When we want to decrease it, we debit it, and when we want to increase it, we credit. Our next set of columns are all under owner's equity. We have capital, which is money you invest in the company. To decrease it, you debit. To increase, you credit. We have drawing, which is money the owner takes out of the company. To increase, you debit. To decrease, you credit. And then we have our expenses: rent expense, wage expense, telephone expense, gas and oil. All of these get a debit to increase and a credit to decrease. And then lastly, we have our revenues, which is service fees. A debit to decrease it, a credit to increase it. So let's go through a couple of transactions and see how to decide what areas they should go into and the amounts in them. So item A, invested cash in the business of $25,000. So we know we invested cash, so our cash account is increasing by $25,000. To increase it, we must do a debit. Where did the money come from? We invested this money, so more than likely it's money that we had and we put it into our business. So we want to keep a running total of how much money we put into our business. We're going to credit $25,000. Notice I have a debit for $25,000 and a credit for $25,000. You don't want to be concerned with having an increase and a decrease. That's not what debits and credits are about. You want to be concerned that your debits equal your credits. Whether both of them get an increase or both of them get a decrease, they still must equal one another. Okay. Item B, purchased a used van for cash for $6,000. So the first thing we did was we purchased the used van. $6,000, that's an asset. A van is an asset. We want to take and put a debit of $6,000 because now that van's value is $6,000. The company owns a van worth $6,000. But where do we get the money from in order to purchase this? It says purchased a used van for cash. So we took the money out of the cash account. In order to take money out of the cash account, we're going to have to credit in order to get a decrease because our cash account is no longer $25,000. We just took $6,000 out. Okay. So continue on in each of those transactions, deciding which area of the two of the account should get, what should get the debit, what should get the credit. And when you're deciding what account should get a debit or credit, determine is it a debit or credit based on having to increase something or decrease it. For instance, on this transaction, when we purchased the van, we purchased it with cash, so we identify the account as the cash account, and then we have to identify what did we do. We took money out of the account, so we needed to subtract that down, which means we have to do a credit. Let's jump down to a couple of the ones that are a little bit more complicated, such as item O. Earn service fees for the remainder of the month of $3,500. $1,900 is in cash and $1,600 is on account. So let's go back to the first part of this. We earn service fees for the month of $3,500. So our business made $3,500. We want to increase that. We want to increase our service fees by $3,500. That's what the business made for the month. So we're going to credit that account. Now we have to break out how was that $3,500 paid to us. It says $1,900 is in cash. So we are able to take $1,900 and put it directly into our bank account because they paid that to us in cash. Now the rest of it, $1,600, is on account. which means that when you hear the word on account, it either means that it's on account to where someone's going to pay you, or on account that you have to pay someone. So on account when someone needs to pay you is accounts receivable. On account when you have to pay someone is accounts payable. So in this case, this is someone who needs to pay us. So we're going to go to our accounts receivable. They're going to owe us $1,600. So we're going to increase our accounts receivable because right now someone owes us $1,600. Now if we go back and look at our debits and credits, remember, debits must equal credits. On our debit side, we have $1,600 plus $1,900, which is $3,500. On our credit side, we have $3,500. So our debits equal our credits. We're in balance. Okay. Also, let's do item P. Withdrew cash at the end of the month of $2,900. Once again, you hear the word cash, so something's impacting the cash account. We withdrew $2,900, so we took $2,900 out. We want to credit in order to decrease that. And because it was a owner's draw, we're going to come to our owner's draw side and see that what happened with that money, it's now ours. So our owner's draw increases $2,900. So we have a debit on owner's draw, and we have a credit on the cash account of $2,900. Now you go through and complete the rest of the transactions, item C through item N, making sure that you put each amount in the correct columns, whether it's a debit or it's a credit, and which account it goes to. Once you've completed all of the transactions, you then should total each of your columns. Total your columns, put the amount that's there for each column, and then you need to subtract them. So I can't do it in this example because there's more transactions that should go in that cash account. But once you get done, you want to determine what's your ending balance. So you'll total everything in the debit side, total everything in the credit side, and then you're going to subtract the two totals to get your balance. I will give you a hint. The balance on the cash account will end up being $21,805 once you're done completing all your transactions. Okay? Once you've completed all your transactions and you've determined your totals for each of the different accounts, you then want to go to your trial balance. Your trial balance, you're going to put in each of the different account names. If you refer back to problem 3-13A, they actually list all of the account names. It tells you there's cash, so we want to put a cash account in. There's accounts receivable, so we want to put that account in. And continue on. There's office supplies. So just type in all the different accounts that are listed. Don't type in the words assets, liabilities, owner's equity, revenue, and expenses. We don't need those names. We need the actual names of the account. Cash, accounts receivable, office supplies, prepaid insurance, etc. Put all of that in. And then you want to come over and determine, is it a debit balance or a credit balance? Your balance is going to come from your T accounts. For instance, when you get done with your cash T account, you're going to have a total for the debit side, and you're going to have a total for the credit side. And what you're going to realize is your debit side is higher than your credit side when you subtract them. So the one that's the higher, once you subtract them, that's what your balance is. You have a debit balance of $21,805. So you're going to come over to the cash account under debit balance and put $21,805. And you're going to do that for all of your accounts. What you'll notice when you do all of those, that you're going to have all of your asset accounts are going to have your debit balances. And then you're going to have some of your expense accounts that are also going to have debit balances. And then your owner's equity and the revenue accounts may be debit or credit. I want you to figure that out. Go back to some of your reading material and see what does it say the balance account should be. Not necessarily the balance figure, but where your balance should always be, whether it's in a debit side or a credit side. So remember, before you can do this, You must complete your T accounts, total up each of your columns. If there's an amount in both columns, subtract them to determine what the true balance is left on that account. And then you want to carry that balance over to wherever it belongs on this. Don't forget to put in all of your different account names. At the end, once you've completed all of your transactions, your total at the end of each column should end up being $44,900. Okay? So when you get done putting in all your transactions for the debit balance, it should come down to $44,900. And also on the credit balance, it should come down to $44,900. If your balances do not equal one another, go back to your T accounts. Double check your figures. First, double check your calculation that you subtracted or added correctly, because many times that's where the error is. Then also make sure that you put your amounts in your balance in the right column. For instance, service fee, it should have a credit balance. So if you're over here on your trial balance and you put service fee and you put it in the debit side, you need to actually put it on the credit side. So make sure your calculations are correct, as well as make sure you have your balances under the right column, whether it's a debit or a credit. Hopefully this helps you. Resubmit your updated homework by Friday, and I'll give you more of that credit so you can get a better grade. Thank you.